Welcome everyone, it's the Crypto Lark, and today I am joined by the guys from Dusk Network. I have with me Yella and Emmanuel. Guys, welcome.
Thank you very much.
It's a pleasure to be here.
Now, before we jump into just what Dusk is doing, I just want to give a big thank you to the guys over at Dusk Network for sponsoring the channel with this interview. But it is an awesome project, so I hope you guys will really enjoy the interview and what Dusk Network is bringing. Now, I think the best place to start, the elevator pitch, guys. Can you tell the audience, what does Dusk Network do?
So we always have a few one-liners, right? And they change around, but I'll just use a few of them and see where it goes. So if you look at Dusk in a nutshell, you can see it as a compliant privacy blockchain that mainly focuses on STOs. The goal there is to take out the middleman from regulated markets without losing regulatory approval. And we use various tools, but most notably things like zero-knowledge cryptography and bulletproof to kind of combine confidentiality and compliance on-chain.
Ding.
I can tell you one thing, that the elevator rides actually became shorter and shorter and shorter.
First floor.
Well, you say it enough and you kind of know what's going on, right? And you guys have actually been out on the conference circuit recently, so you've been meeting with a lot of people. You know, you've been shaking hands and getting to know a lot of people, and I think that's really, really cool as well. So we're going to get into that a little bit later, though. Now, what is the problem that you want to solve?
Oh,
Oh, so many.
Where to start with that? Well, let me just well, okay. So one of the promises of the blockchain space, right, of the decentralized space, is to remove the middleman, to remove trust or the need for trust. Mm-hmm. Okay. So when we are talking about financial assets, when we are talking about financial products, then normally in regulated market, then there is this struggle between, in actually removing the middleman, in creating a trustless environment. And this comes from two different factors. The first factor is the fact that it is highly governmentally regulated, the space. Whenever we are talking about, for example, financial markets, then you need to have, regulatory approval, because, by definition. And in order to have regulatory approval, then you need to provide properties, you need to have two different prerequisites. You need to be able to trade among approved transactions. And normally these pre-approved transactors are those transactors that have been passing through, a regulatory process like KYC, which is actually, part of an AML, so anti-money laundering process. So they need to show that, the source of their wealth is legitimate, and also that they are not bad actors, and also that they have been, properly informed about the financial products that they are going to trade. At the same time, there is a need for confidentiality. And need for confidentiality comes from the fact that in a regulated market, it is also prohibited to manipulate the price in a way that is illegal. Mm-hmm. And so much so that even the information that are released by the different assets or all the organizations that oversee or issue different financial assets, even those informations actually or corridor voices or anything that is released improperly, it just goes toward, it just provokes price manipulations, which is illegal. Mm-hmm. And therefore, it is very difficult because you have these two competing needs: the capability of auditing and knowing who are the transactors inside of a network, and the capacity to ensure privacy in this different transaction. Mm-hmm.
One of the famous examples in the last few weeks was probably the Elon Musk tweet, right? I think everybody saw it, and it's things like this that are considered, for example, a form of market manipulation. If a huge CEO, influential figure like that makes these kind of, price predictions almost, and well, it cost him a hefty sum, but this is a typical level of regulation for a mature market.
What's the Twitter about?
He said he would take the company private again at a certain stock price.
All right.
And they got a 40 million fine for it, half personal, half for the company. But that there's similar examples in crypto space, right? If somebody moves a huge amount of funds from an empty Gox wallet or from a Silk Road wallet or something happens with Tether, Reddit explodes, it's all over the front pages, that kind of stuff. It usually has a negative kind of downward spiral effect on the price, right? Kind of a dumping panic. Now these are examples of in the case of empty Gox or Silk Road, kind of defunct companies and their funds have been taken, so it's slightly different. But let's say you're a huge asset management firm like a fund and you want to move or exit certain positions, it's very difficult to do this on an open ledger without destroying your own value. And when you go into the security token space, you're not just potentially causing a token dump, but this is somebody's equity, right? So it's very, very bad thing to.
That's it.
Dump.
Absolutely. I mean, this is a really important technology because let's imagine that JP Morgan has a whole bunch of some particular token and that they move that and that causes a market panic. People see that and go, oh, JP Morgan's selling, I should sell too. And that's not what you want. You want actually people to be able to have these transactions and have these business dealings in a private way. And that's where the technology comes in. And one of the things that really attracted me to Dusk was, holy Batman, technology. You guys are bringing so many different things together in terms of technology. Now, without getting too deep into the technological implementations, I mean, we have ring signatures, we have bulletproofs, we have a different consensus mechanism. Can you just run us through some of those very general ideas and why you chose to go with these?
All right. So for, in order to be able to provide the scalability that, trading or financial trading needs, and in order to provide, to remove the third-party actors, then you need to have a technological proposition that is built from the ground up for confidentiality. A network, if you will. Now, we have been trying to, look around whenever we started this path, because we are engineers at core, so we do not really want to reinvent the wheel. We want to use something that has been proven. But unfortunately, all we could find in the space for what concerned privacy was, the usual Monero, Zcash, and Dash, these kind of propositions. But these propositions, they are all skewed and they all focus on one property of a network, which is unidirectional transfer of value. Whenever you have a network, you need to not only have a unidirectional transfer of value, meaning I am transferring some Monero or I'm transferring some cryptocurrency, whatever they are, from a wallet to another. You need to have something else. You need to have the capability of exchanging a certain asset, meaning I am paying for a certain asset, so I am transferring value, and then I receive value in a different form back. This is a bidirectional atomic transfer of value, right? And that is the basis of trading of financial assets. We didn't even stop there. We even went into the space of time unbound bidirectional transfer of value. This means that you do not have an atomic transaction, but you have a continuous transaction. Streaming, for example, or this video conference, for example, that's a very good example of a time unbound transfer of value. So we didn't really find a network, confidentially oriented or confidential or privacy oriented network. Hence, we had to build one from scratch. And we reused and we reused a lot of the literature that was already available, because, like I said, we do not really like to reinvent the wheel. But we also made a lot of different innovation in, for example, on these technologies that were available to us. The entirety of the consensus methodology had to be redone from scratch. And the reason for that is that, and this is something that very few people point out, from a regulatory perspective, regulators normally are policymakers, right? So they do not only write policy for financial products, they write global policies. And one of the policy, for example, is the capability of taming CO2 emission, the capability of being eco-friendly. So anything that uses proof of work, for example, is automatically frowned upon by regulators. Because, let's face it, if we're talking about Bitcoin, for example, right now, I believe, miners consume something like 5% of the total amount of energies that is being produced annually. It's an energy waste. So we had to, we couldn't really, execute on our vision by using proof of work. We had to use something else. Now, the next best thing is proof of stake, but proof of stake has got another problem. The problem is that stakes need to be public, which doesn't go very well with, with a confidential network. So we had to create our own consensus methodology, and this is called segregated Byzantine agreement, which is the one that I, being the author, together with Fulvio Venturelli, my co-author, and that uses a lot of a lot of different technologies. It's highly inspired by BA Star from Silvio Micali, but it uses bulletproof in order not only to do confidential transaction, but also to be able to have sort of a proof of stake philosophy, if you will, in which the Sybil attack is prevented by staking a certain amount of Dusk. But this happens in a completely confidential way, using something which we call proof of blind bid. So in order to be regulator friendly, we had to provide confidentiality not only for what concerns transaction, but also for what concerns consensus, which is something that nobody else is doing. We had to provide a capability of doing bidirectional atomic transfer of values, which is essentially what a prerequisite for doing security token trading exchange, and the capability also of remaining auditable and remaining within a certain regulatory framework. And this is why we have been choosing the technologies, and we have been assembling the technologies in the way that is explained in the white paper, and that gave birth to the security or the confidential security token standard.
When you start to realize how difficult it is in terms of regulations and what regulators desire and what companies desire, and finding the exact fit for that, that can be very, very tricky. And it seems like you guys really hit the nail on the head with this one. Now, I did want to mention as well, you have a 2-node economy. So
yes.
that for a lot of people, it's like, wait a second, there's one node out here doing something else, another node over here doing something different. Can you guys tell us what are the differences between the nodes?
Yeah, so basically there's to keep it at a very high level, there's one type of node that performs transactions, and there's another type of node that performs basically all the other steps in the consensus. So the transactional nodes, for example, are fully confidential. That's where the actual stuff happens, right? The transactions, and they get put into a block, and a block gets proposed, and then it gets gossiped to this other type of node, which is non-transactional. We call it a provisioner. And basically what they do is they take care of more intensive tasks, like block verification, and then voting, and then finally notarizing it onto the chain, and kind of with the correct kind of block reward information that then gets minted, if you will, to the block proposer. The reason for splitting this is, first of all, because you can kind of split the intensive work from the normal stuff, meaning that to participate as a node, provisioner, there's not that much computational requirement. You want a bit better uptime. It also means that because a provisioner is there's no transactions going through it, or you can do a few other clever things.
Yeah, no, of course. I mean, the thing about the provisioners or the capability of separating the nodes came from two different requirements. First of all, scalability. We want to be able to have a block time that is as short as possible. The capability also of doing notarization is something that was a key in order to avoid something like, for example, forking or chain forking. The second reason why we created two different roles inside of the network is the fact that we want everyone to be able to participate in the consensus and to access a reward. Let me give you an example. In proof of stake, if somebody, for example, was creating a master node 2 years ago in Dash, talking about different kind of cryptocurrency. In order to do or to run a master node, you needed a certain amount of Dash. I think 1,000 Dash, yes, which was quite a sizable amount of money 2 years ago. But then 2017 happened, Dash went
master nodes were over $1 million for Dash.
Exactly. So suddenly only the richest could run a master node, right? So we have been tackling that particular issue, and we decided to have a provisioner that would be, sort of a normal staking economy or subject to a normal staking economy, but the node or the block generation is done by nodes that actually might even be wallets at some point, because the performance requirements is really not that high. And we are rolling out a way in which the blind bid that is used in order to propose a block always remains affordable. So we have a rolling strategy for what concerns the fees. So they never get out of hand, and we are using a moving average on the fees that are being paid, and that also dictates what would be an affordable bid for everyone to participate inside of the consensus network. And as a last point, the fact that we have that we segregated bids until agreement, the block generation process from the validation process, make sure that we can create different economic structure for the latter, in which staking no longer leads to centralization, for example, like mining centralization or staking centralization, because you can operate a reward system that achieves a balance between the probability of participating to the validation process, which is counterbalanced by the fact that if somebody stakes too much, then the profit that he gets actually decreases. So instead of having, the more I stake, the more I get in terms of ROI, we have a different curve. So if I stake just as much in order to have a very good chance to participate in the verification process, then I will maximize my profit. But if I have too much, then that harms the profitability of running a provisioner. To be able to decentralize provisioners as much as possible, and to have an economy that doesn't centralize verification and validation and notarization power, hence achieving economic decentralization.
I like it. Fascinating mechanism towards trying to maintain a certain amount of fairness in the network, because that is definitely a criticism of proof of stake networks. That okay, great, the rich get richer. Who can afford these master nodes? In a lot of situations, even early on in the game, I mean, a lot of people don't advertise how much you're going to need for a master node. So people get into private sales, they get the whole bunch of things, and they get richer later when it goes up. And so it's a problem that's not addressed often enough in the crypto industry. So I'm glad you guys are working on a mechanism to address that from the get-go. Now, we have to move on to security tokens because this is what is super exciting about Dusk. With all that technology, that's great. I love technology. That's cool too, guys. But like, really, security tokens. This is massive. Everyone's talking about security tokens right now. It is the big thing. It is going to be one of the key trends moving into the next couple of years. Now, can you just tell anyone who out there who might not know what is a security token and why is this industry so damn important?
Well, so let's start with the security, right? So security is basically a right to some kind of asset that has a value in the real world. So the most easy examples, for example, a share in a company, right? A piece of equity, or a bond, or a piece of a fund, or a building, a building deed, you name it. Now, the idea about tokenizing this is that you leverage the benefits of blockchain, right? But then for the security space. So you can take out middlemen, for example, brokers or dark pools, and you basically bring the cost down of maintaining and issuing a security. And you should also significantly bring the barrier of entry. So smaller companies can access new methods of fundraising that previously, for example, didn't have access to things like the IPO because it takes a few years to prepare, a few $100,000, that kind of stuff. So that's really the benefit of bringing blockchain into the security space. Now, when you look at the security space and why it hasn't really come to fruition yet in the blockchain world, that's kind of where our differentiators come in, right? So there's probably already been like a year of talk about security tokens, yet there's still not that many people who own them. There's not been that many big STOs out there. And the reasons for this, well, there are a few. We already mentioned the lack of meeting the requirements that are actually relevant in the real world, confidentiality, compliance, but also that many of these platforms, because they build on top of Ethereum, for example, they're working with a protocol that isn't built specifically for this, right? Meaning they have to work around the quirks of Ethereum, meaning they have to go off-chain with things like custodians, these type of centralized for-profit middlemen that you now reintroduce in the blockchain space.
Great.
Yeah, it's amazing. But that means that having to go off-chain, first of all, it hurts your scalability because it's not automated. So if I want to send you a security token, then we now have to wait for some other guy to approve it, right? That doesn't scale up very well. Well, it sounds ridiculous.
Because it is. Because this is the technology we're building to replace all this crap, right? But the technology's not there with Ethereum, for example.
You cannot just build a digital equivalent of the current paper reality, because then it's nice, it's pretty, it's probably quite cool, but it doesn't bring benefits, right? Because these companies don't care about a cool consensus mechanism or that we're solving things in bulletproof. Like they want to know, is it going to be cheaper for me? Can I bring this to market quicker than an IPO? What are my tangible benefits? So if you're building a process that is still exactly the same, probably more expensive now because you introduce all these issues, then that's not really viable, right? So we want to create, first of all, a protocol that is fully free for everyone to use. You can see our token standard for STOs like ERC20 was for ICOs, for example. If you're smart enough to use it, right, you don't need to talk to us. You can use it. It's fully free. That's the whole beauty of the space, in my opinion. And it has to be faster and cheaper. And it's cheaper because, well, when you look at security token platforms right now, you lose 2% of your equity. Maybe there's $100,000 in setup. A drill, not that interesting for a medium-sized business that is looking to raise additional funds. So we wanted to bring all of these barriers down, bring all of these requirements on-chain by building something specifically suited for this from the ground up, and that then introduces things like proper decentralization, proper scalability, kind of the maintenance factors that we see you need to solve in order to compete with the current centralized system, right?
Ultimately, all the different competing platforms that try and strive to provide the capability for third party to issue security tokens, they are profits. They are for-profit organization. What does that mean? It means that they need to create profits. As simple as that. Since they are for-profit organizations, and I'm talking about Securitize, I'm talking about Polymath, I'm talking about Harbor, I'm talking about all these different players, which have quite an interesting technological stack, but they are a for-profit organization, meaning that they need to create money for their own investors. They need to create money for the organization to run it. Which means, and where is this money coming from? It is coming from all these third-party organizations that wants to create their own security tokens. So they charge like a middleman. They charge either it is a mediator fee because they provide these validators or this proxy that need to enforce the restrictions between two different transactors. You might recall that I started this conversation by pointing out the fact that in a regulated market, transactors need to be pre-approved in order to just make sure of that all these different companies, they have this validator or this proxy. The Dusk Foundation is a foundation. We are not a for-profit company. We are a technological stack, pretty much like Ethereum, that doesn't cost a dime a smart contract, and everybody can do it. So anybody being technically savvy can very well just use our platform without us to even know about it.
They don't have to come and ask you permission to do it.
Exactly right.
Yeah, and they don't get an invoice at the end of the month.
They don't get an invoice at the end of the month. And our value proposition is the fact that the restriction between transactors is enforced on chain. So there is no need for a validator. There is no need for a proxy, which is the entirety of the value proposition of the confidential security token standard.
Mm-hmm.
Every company, every third party that builds on top of Dusk, they remain accountable and they remain responsible for going through the KYC and AML. We do not impose any vendor. We just provide them with a technological tool to commit the outcome of this process that they still need to run. And this is something that it is like that for everyone inside of a regulated market, but we provide them with the capability of committing the outcome inside of the network, so that in the end, the confidentiality is provided by confidential transactions, and at the same time, the restriction provided at the protocol level. On Ethereum, that is not possible because Ethereum is not a platform for STOs, and therefore all these other third parties building layer 2 applications on top of it, they need to work around the limitation of the protocol and take chain or have their own side chains, but in the end, they are a gatekeeper. In our case, it is the entirety of the protocol that takes care about all these different regulatory requirements.
And as a nuance, right? Ethereum does probably 1,000 things better than Dusk, but we've built Dusk for this. That's kind of the big point. If you're trying to tackle something that's quite complex, then you need to have it in mind when you build the solution, right? Ethereum is general purpose, so it's going to do a million things better than Dusk will ever do.
And needs to scale a million things.
Also
at the same
true.
time.
Yeah, but
Alex, scale it.
Yes.
It's true, guys. It's true. It's like you said, you've got a purpose-built blockchain here that is designed for security token offerings. In fact, you're even introducing the XST standard, which is what basically you're hoping is going to be the standard for security tokens in the same way that ERC20 is the standard on Ethereum, which is pretty exciting stuff. Now, I wanted to move on just to talk a little bit about the token itself. So what is going to give the token value? What is the token going to be used for within the network?
Now you're really kicking off my 10-minute rant on the token. So Dusk, it's a main chain currency, right? So the tokens are built on top, but Dusk in itself is a utility currency. And there's a few things that can give a utility currency value. The first big driver is usually kind of of supply, right? So you need a certain amount that is either locked up in your node economy or that is kind of burned on a yearly basis, a partial fee burning, these type of structures. And this creates a certain baseline. So let's say somewhere between 10 and 30%, I think is realistic, kind of locked up at any point in time. If your nodes run well, if all these things go well. Then what you want for the rest of that supply, the other 70%, for example, ideally you want that to move as much as possible, because this liquidity implies adoption, because it's being used for various things, and this can be STOs fundraising in Dusk, or companies paying dividends in Dusk, or using zero-knowledge smart contracts, or accessing private communications, or as gas for a token on top. There's all these kinds of functionality, and you want this to move quite a lot. So this is kind of called token velocity. So you want kind of your remaining supply to ideally move a few times per year, because this creates a liquid economy. This means it's kind of a preferred currency for many things, and that's when you start getting into the space of the second driver, which is basically store of value, right? It's kind of a very big ambition, but I think utility currents, whether they realize it or not, they're all playing in that space. So if you cannot capture part of the value that is basically Bitcoin space, and there's some niches around it, for example, privacy currency, that is ultimately what you're playing for. So our philosophy is very much that there's probably room for, let's say, 10 utility tokens to really capture value. When we look at kind of the big Bitcoin space and a few niches around it, and that's where we want to be, let's say 12 to 18 months from now. So the goal is a solid removal of supply, and then a very liquid adoption base on top of that. And there's a few other things that need to happen. For example, the whole crypto space needs to become more robust. You need a bit more predictability. This all increases your chances of capturing value and storing value. So this is not fully in our hands, but there's a lot that you can do yourself that set it up for success. So this is, I spend a lot of my time studying this part, because I think these economies are underestimated. One of the things that we are really playing for is, for example, solutions on top of Dusk, in the case of a utility, for example, to please don't do your own token, because these tend to not capture value very well, right? They're application level tokens. It's much better for them to run it in Dusk, or for example, STO it, so that the actual thing that you're building captures value through equity, for example. I think the whole space is moving here. Utility currencies, I think, mainly belong on kind of main chain protocols.
Layer 1 or layer 0 protocols.
They stand a chance at capturing value. Layer 2 application level, highly unlikely.
Very, very interesting. I think we could talk about tokenomics for a long time, because it's such a fascinating topic, and actually most projects don't think about it at all. They just think, we're going to make $30 million. Let's just throw the tokens out there and see what happens, guys. And that's, of course, not the way to approach it, because it's bad for the people who go out and buy the token in the end. And I'm really encouraged that you guys are putting a lot of thought into what is the token going to do and how are our tokenomics actually going to be. Now, the competition. There are quite a few different competitors out there. I know you kind of mentioned Polymath a little bit earlier, for example, but we have a few others that are kind of working on different implementations for bringing this all together. Now, from what I've seen, you guys are bringing an incredibly robust package here with the technology, with the token standards, token economics, all this different stuff. But who do you see as being your biggest competitor in the crypto scene?
No one.
That's a good answer too. Like, we blow them all out of the water, not even close.
I have to say that I am partial for a couple of propositions. I am a fan of Silvio Micali, who's the creator of zero knowledge cryptography back in the 80s, and right now I believe he has been closing 60 million equity round for Algorand. And Algorand has been a source of inspiration. It's quite different from what we are doing, but definitely is a source of inspiration for us. Although right now I believe that they moved completely in the permissioned space, whereas Dusk is a permissionless protocol. I wouldn't see any kind of layer 2 platforms on top of Ethereum being a competitor. Probably they will capture some kind of market share, but it is also true that this particular proposition, they are plagued by high costs, and in the end, anything that has got that targets SMEs, for example, need to be affordable. They will have a lot of problems with with the underlying consensus methodology, because the underlying consensus methodology needs to be decentralized in order to not be controlled by a foreign country, like which is pretty much the case for mining pools. That I believe they are completely centralized in China at the moment. They need to be eco-friendly, because the policymakers are that creates policy in the ecology. They are the same that in the end need to also take all the financial space. So any kind of layer 2 has got so many problems to solve, and the only way to solve it so far has been creating another middleman. So I'm not really that concerned with those. I like Ravencoin a lot. They are doing a very good job. They are. I know that Yana doesn't really like.
I like Ravencoin too. They do some interesting things as well.
Personally, I think they have a lot of community support. They are quite naive in their, in tackling the STO, considering that anything that is built on top of Bitcoin is inextricably intertwined with, the problems that I already highlighted with proof of work. There has been some talks about, introducing snarks on Ethereum, or Starks. Starkware is very active lately at DevCon 4. Eli Ben Sasson, he highlighted several different improvements on the Stark technology, but again, it's still kind of a general purpose kind of zero knowledge cryptography, and it's got nothing to do with STO. So. And from the communication perspective, there are a few players. This is a strategic and use case for us, which we are going to upsell to those organizations that already have an STO on top of Dusk. So it's not really that important for us to compete with them. But I can definitely mention Mainframe, for example, with whom we had, I think we had a joint conference.
Yeah, we were with them in Berlin.
In Berlin some time ago, and yeah. So I think that those are pretty much some competitors.
Okay, guys, what I want to know, except for the bad beds in Tel Aviv, of course, what keep you up at night? What's worrying you about the project potentially?
Oh wow. Well, there's one thing, and we're trying to tackle it, but it's a little bit outside of our hands, right? So when you look at the ecosystem, there's a protocol and third security tokens on top of this, right? But then the next step, kind of the final step, is the secondary market. So these tokens need to become traded. And this together forms the whole ecosystem. Now, we are very active in the protocol space, obviously, and we have incubators that are going to help kickstart adoption. So we also have a part in the issuance space, but then in the exchange space, the trading space, you are also relying on other players to kind of meet your roadmap to flesh out the ecosystem, right? Because if Binance or OKX or you name it, other big exchanges cannot trade securities yet in a regulated fashion by the time we are able to have a lot of STOs hit the market, and your ecosystem is a little bit out of sync, if you will. So what we are doing is we are slowly starting to meddle with the players that are in the secondary market space, because we want to make sure that that these roadmaps match up, because it will be a shame to hit the ground running from our perspective and then not have a great trading scene yet for another few months.
We have 1,000 STOs and nowhere to buy them or trade them.
Nowhere to trade them, So that's a big consideration. So basically the worry is always that you cannot control it all yourself, right? You try to do your best, but there's some dependencies always. Yeah.
That's right. But you're building one part of the city, right? Of the
it is also good that we have a few mitigation strategies there. We are basically we are talking about securities in the end. I mean, the tokenization of security indeed kind of lowers the barrier of entry and creates liquid assets. But the interesting part about security tokens is the fact that they have value regardless of the secondary market. So if you, for example, for what concerns utility tokens at this particular point in time, the market has been too immature. They cannot really capture that much value. And the secondary market is where the battle is played. If you have certain particular tokens and you cannot trade them, then you can use them, but probably they are not going to be that valuable. For what concerns security tokens, they are backed by real value. They are backed by, if we're talking about equities, by the performance of a certain organization. If we're talking about, bonds or other kind of value-backed assets, they capture the value by proposition. So OTC deals or even fancy and exotic concept like security tokens, atomic swaps, they in fact already provide a lot of value. That said, we are also tackling the secondary market and the regulated, and we are present in the regulated exchange scenery, but it is too early for us to disclose anything on that topic.
Interesting. We're watching out for announcements around that to come up, without a doubt. I mean, it's still very, very early times for Dusk. You can't tell us everything at once, and people would say, "Well, that's all exciting." You gotta, let us know when more things come out.
We need to have a reason to come back, right?
That's right, without a doubt. Now, just in terms of any sort of, I guess, moving forward in terms of like updates and what can we expect next? I know the mainnet, for example, that's not coming till about mid next year, right?
Yeah, so Q2, hopefully on the early side of Q2, but it'll be, let's say, another 5 months or so.
And a lot of sleepless nights.
Inevitably. Hope you guys get better beds than get off the hotel and conference theme for a little bit. And of course,
this is the last stop actually, so we should be able to get back to the grind.
That's good. Now, other things like zero knowledge smart contracts, for example, that's a bit later down the road as well, correct?
That is correct. It is something, just a little thing about zero knowledge smart contract. Our zero knowledge smart contracts are not general purpose smart contracts. They are the formalization, or if you will, the encoding of certain particular rules in order to comply to probably more complex sets of regulations. And our zero knowledge smart contracts are still based on bulletproof, because bulletproof can be used in order to prove a certain particular. They can be used as range proofs, but they can also be used in order to prove any algebraic statement, which is in fact a prerequisite for any Turing completeness. So we are actively working on it. It's, like I said, before being able to provide a general purpose zero knowledge smart contract, a lot of time will have to pass. But initially, for anything that has got to do, for example, about rules on removal of actors from a whitelist that needs to be done in a decentralized fashion, or encoding the logic for when to pay dividends, for example, or all these kind of things, then that is going to be part of our early release.
Very, very cool. Guys, the last question here for you for today. There is no public sale per se, but there is a sale going on ethfinex. That was it, $1 million worth of Dusk tokens were available on ethfinex. Is that correct?
Yeah. So most of our sales have been conducted privately, but probably one of our more interesting partners for the viewers is iFinex, the mother company behind Bitfinex and ethfinex and EOSfinex, and the Finexes by now, has helped us to host a public-facing allocation on Ethfinex, where you can go directly to the Ethfinex platform or go to dusk.network/Ethfinex. They'll take you to the sale. You can pledge there and do the whole KYC AML good stuff, and then take part in what is essentially our only public allocation.
And now, is there any availability still for the private sale for anybody who's looking for a bigger amount of Dusk tokens?
Well, they would have to be very fast. So we plan on wrapping it all up in the next 2 or 3 weeks. We're in a comfortable space. We're basically reviewing the last kind of gaps that we see for the next few years and trying to fill those in with the right partners. If there are big parties that think they can add value in that space, then they can email pledge@dusk.network.
There you go. There you go. For anybody who likes what they've heard today. And I certainly am very excited about what you guys are offering at Dusk. I mean, the technology, all of it coming together is super interesting. Obviously, the security token industry is going to be massive. And the fact that you guys are aiming at how can we make this regulatory friendly for STOs to launch is really, really cool. It's really exciting, guys. So thank you so much for coming on the show today and telling the audience a bit about Dusk Network and what you guys are doing.
Absolute pleasure, and I'm sure we'll be back.
Thank you very much for having us.
Thank you.
Have a great day.